Thank you very much, Rajesh, and good evening, everyone. Of course, it's always a pleasure to come in such an august gathering of finance professionals. I have been many times a speaker in the Dubai chapter, but it's a privilege to be first time speaking with the Abu Dhabi chapter, and I'm very impressed with the number of people who have turned out at late hours on a working day, and tomorrow also is a working day. So it's always an honor to come and speak, and especially on a subject which is very much talk of the town for the last few years for both good reasons and bad reasons. So we'll get into all those things. But first of all, thank you very much to the presiding chairman, John George, CA, ex-chairmen who are here with us, and of course the executive secretary. So let me get into, because we don't have much time and we are talking about something which is a bit technical. And one good input I received from Mr. Neeraj was that keep it very practical, so people should take something back home. And that's what I'm trying to do here, because we come from an exchange background. So we know the whole ecosystem, how this whole thing works, how you can do trading, what is actually crypto. So I'm not here to just talk about theoretical concepts and definitions from some Wikipedia thing, but I'm here to give you something that you can take away, and at least you can make up your mind. If you're already not inside the crypto world, you are a fence sitter, you can jump into it, or if you think that I haven't made enough justice, then you can continue sitting on the fence till we meet again next time. So very quick introduction about Yoshi Markets. Yoshi Markets is a kind of a regulated exchange regulated by Abu Dhabi Global Market, which is the federal regulatory authority, which is called as FSRA, which is like any other DFSA in DIFC or similar kind of authorities that exist who are regulating the financial markets. So I'm sure you are pretty much aware about ADGM and the framework. So Yoshi Market has received its FSP for setting up an exchange as well as a custody platform where clients can come, register, and they can buy and sell cryptocurrencies, and they can leave their cryptocurrencies in our custody so that they don't have the headache of creating or maintaining their wallets and losing their private keys and losing their investments. So this is in a nutshell what Yoshi Market is. Of course, it's managed by a very professional team, as Mr. Rajesh introduced me. Similarly, my other team members, we are very much experienced into setting up such kind of platforms and running it very professionally. Our shareholders are also very much reputed. They have some big achievements under them, and especially in the Abu Dhabi market. And of course, the technology that we have deployed and the leadership that we have, Yoshi Market is going to be one of the leading exchanges here. And I think soon you people can start, if you want to get into crypto, you can start opening your accounts with us and you can start trading on Yoshi Market when we start the process. Now, okay, what is crypto? So something, see, when we talk about crypto, people get really sometimes very paranoid, or they get sometimes very nervous, or sometimes they get very worried because they really don't understand what exactly is crypto. And that's why I always start that what is crypto, and I don't want to give you some definition or some bookish knowledge on crypto. Let me tell you something very interesting, that crypto did not bring anything new. Everything that today crypto has used to exist before even the crypto came. But all these things used to exist in silos, like distributed ledger technology, let's say private keys and public keys, hashing, security. All those things used to exist before. But what crypto did, or what, as Mr. John said, the founder of Bitcoin, whom nobody knows where is he and what is he doing now, someone called as Satoshi Nakamoto, what he did, he combined all these technologies together. So he combined ledger technology, which is called as like blockchain. Then he combined private key and public key into it, and that is called as hashing, so that you have a security on the network. And then he also combined a process called as mining, whereby the cryptocurrencies are generated by using that mining process. So that basically resulted into something that we all talk about crypto, but crypto is just one part of that. Actually, it is called as digital assets. So what digital assets are, one part of that is crypto. And this is what the crypto is actually. It's just a asset class which does not exist in a physical form. It's an asset class which exists in a digital form. And because now the world is moving so rapidly towards digitalization, so this also is catching up the interest of all kind of investors or people who are getting into crypto, mining or staking or DeFi or even just trading. So this is what exactly the crypto is. And the one thing that crypto has brought, which brought a major change, especially in the financial sector, and all of us, because we come from the financial background, was to decentralize the authority, or to break that kind of structure that used to exist. Like, we always have central authorities, or someone is governing a monetary policy of the country, or who will print the currency, or who will govern the interest rates. But crypto, using the distributed ledger technology of blockchain, brought a decentralization of the complete entire system. So from one person controlling that what will be the new monetary policy, or what will be the interest rates, or what will be the price of my, or what will be my deficit in budgets and things like that, crypto gave this power to an autonomous community. So in case of all the cryptocurrencies, everything is controlled by a community of miners, or let's say validators, or the people who are involved in the process of approving the transactions, who are creating that blocks on the blockchain. And most of the time, it is more than 51% consent that is needed to do any transaction on a blockchain, whether to generate a cryptocurrency or to transfer the cryptocurrency from one person to another person. Everything is needed a consent of 51% of that community. And that's why there is a community angle into the blockchain and into the cryptocurrencies, and that brings more kind of a transparency and more a togetherness of a cumulative decision, instead of a few people deciding for the entire user base of that asset class. So as I said, crypto is just one part of a broader framework which is called as digital assets. So this is what I want to, I think this is a good takeaway for you to really understand that cryptocurrencies is not just the entire kind of a world of digital assets. Digital assets, if you can see, can be broken up in these 5 different verticals, which one vertical is of course the crypto assets that you can see on the second side. So this is crypto asset, which we always talk about: Bitcoin, Ethereum, Ripple, Solana, XRP, so many other different kind of cryptocurrencies. So those are the cryptocurrencies that fall under the definition of crypto assets. So similarly, we have digital securities. Now this digital securities is also becoming very popular, because that again brings the advantages of the technology that on which the cryptocurrencies operate, which is the blockchain. So this is the digital securities, which is nothing like at the end of the day, it's like a digital security, but in the form of a tokenized form of digital security. Third thing that you can see there, it's a bit hazy, is fiat tokens. Now, fiat tokens are becoming very popular. You would have seen people always talk about USDT, USDC, or something that is linked to an underlying asset class. So that's a fiat token. And mostly in these kind of tokens, the underlying is a fiat currency. Now that's the difference between fiat and the crypto. So fiat tokens are nothing but a kind of a token or a cryptocurrency which is backed by a fiat currency. And that's also becoming very popular, like USDC and USDT that people have, which they can use to buy and sell cryptocurrencies instead of buying it against a fiat currency. Then of course we have derivatives and funds, which is also becoming very popular now. Crypto is almost like 12 years old, but a lot of the time the crypto existed only in a very simple spot market, where people who have money can buy and people who have crypto can sell. But in the last few years, like especially last 3 years, we have seen a lot of derivative products has been introduced on some largest exchanges in the world, like CME or the NASDAQ. They have launched like futures and options also on the cryptocurrencies. So a lot of sophistication is coming up, and a lot of maturity in terms of new product development is coming. And similarly, the funds, ETFs, ETPs, they're also coming out with a lot of innovation, whereby more sophisticated investors who don't want to just get into the spot market, they can get into more leveraged positions using the derivatives contracts. So this is a kind of a breakup of the universe of digital assets, and crypto is just one part of it. Now, just to understand, like I said, 12 years back, this white paper of 8 pages came from somebody called as Satoshi, and suddenly people started taking interest into it, and they started mining of the Bitcoin. And once the mining of the Bitcoin was done, they started using that for commercial transactions. Many of you would have heard that pizza day, when like I think 8 Bitcoins were used to buy one pizza, or like almost 10 years back. So those kind of small transactions started happening, and seeing the advantages and the technology sophistication of Bitcoin. Similarly, other cryptocurrencies started coming in, like Ethereum came in, XRP came in, then Solana, all the Polkadot, and all these cryptocurrencies started coming in. So with the current status, let's say analyze what is the current status of this industry. Like whenever we talk about an economy of the country or the balance sheet of a bank or a balance sheet of any corporate, we always look at what is the size of the balance sheet or what is the size of the GDP. So, and when we look at any markets, so like we look at Bombay Stock Exchange, we look at London Stock Exchange, we always look at market capitalization. So similarly for crypto also, it's very good to have some statistics here that what is the total market capitalization in just 12 years of its existence. And out of the 12 years, you can say first 5 years was just like people were just playing with it. There was no serious efforts going into it. It was only few bunch of individuals who were like either mining it or trading into it. So if you see the real work that has started was only just 5-7 years old. And in just this kind of a small time frame, the total market cap of cryptocurrency is already $1 trillion. And this is with the today's prices. And you would have seen that especially like 3 years back, 3 months back or 4 months back, the prices were much, much higher. At that time, the market capitalization of crypto was $2 trillion. And this can be a bigger, much more market capitalization or much more GDPs of so many corporates or so many countries that are there in the world. So that shows the kind of interest and the kind of activity is coming into crypto space. In just few years time, we have reached 1 trillion market cap. You can see based on the past growth from 2019 onwards, there is a CAGR of 56.1.4% of growth rate that is being witnessed and is being projected till 2025 that this will be the growth rate of crypto markets. Global active cryptocurrency users is 300 million, which is again a big number. And I don't know how many people know, and something which we can take a proud in, India is with the biggest numbers. And this is like the real statistics published by one of the leading agencies in crypto market. Out of 300 million users, India has 101 million. So I think technology has always been very savvy with Indians because we have been always technocrats and software developers. So I think that has been one of the reasons. And of course, India still has a very young population. And that's another reason that this is picking up very quickly and getting adopted by millions and millions of Indians. And as we speak, this number is growing and it's going up. And as I said, because of the young population, that's another very interesting statistics that if you can see, people under the age of 34 are the highest adopters of cryptocurrencies. So I'm sure, I'm not sure what is the age group that we have here, but I can say with certain confidence that it will be mostly, median will be mostly 34 plus. So if I ask people here, how many of you have any time dealt into crypto? Can you please raise your hand? Which is not even like 40% or 30, like somewhere around 40%. Had it been a university, if I was speaking there and people were like in the early 30s, this would have been at least 60-70%. And you can test it. You can go and talk to your kids at your home, and I'm sure many of you will get an answer that yes, they're already dealing in crypto in one way or other. So that's another very interesting thing. So that shows that the younger generation, which is coming up and adopting this technology so quickly, so that's going to be the real reason that why this growth will continue for next many, many years, because this new generation, they really hate. Even my son, he hates fiat. He says everything should be in digital form, in form of cryptocurrencies. I can use it in my gaming. I can use it in my metaverse. I can use it in my bots, and everything that I can use digitally, I will only use even in the physical world. So this is the mentality of our kids and the new generation that is coming in. So that's going to be the real driver of the growth in cryptocurrencies. UAE, of course, as we all know, has been always at the forefront of adopting new technologies, right from our leaders. They have been very much open for this kind of ideas. Blockchain has been adopted so very quickly. Like all the DLD transactions these days, they are done using the blockchain technology. So UAE ranks third in the MENA region, like the whole of MENA, in terms of per capita ownership of cryptocurrencies. So that's another kind of a interesting fact that we have here. So many times again, people ask me, okay, we already have fiat, we have a banking system, we have a monetary policy system, we have all the economics that have been defined, not just in last 100 years, it has been defined using like in the last 200, 300 or 400 years, we don't know. So why this new crypto, what it really does, why it's taking up the whole financial ecosystem in a storm? people who were really kind of anti-crypto, like the big banks, don't want to take names, internationally known, very big banks who used to come out with, or even some very big financial experts, like the heads of the biggest monetary authorities or the heads of biggest central banks, they used to be very critical of crypto. Why they have changed their opinion? Why people like the big banks like Standard Chartered, like JP Morgan, like Citibank, why Facebook, why all they are jumping into crypto? There must be something. So what are these advantages that really crypto brings? So as a technology, because crypto is all about technology, first of all, the first thing that it offers is the speed of transaction. So that is something that makes crypto stand out. That why the technology that is, and as the right example that was given like by Mr. John, that we have ERP systems, we have system, but many times the system fails. And not just like once in blue moon, this system fails. We have systems in our place. These systems fail like on a monthly basis. But why Bitcoin, why the blockchain of Bitcoin in the last 12 years has not failed? Like now we have seen 300 million users. And out of these 300 million, every one person has Bitcoin because that was their interest to get into crypto. With 300 million users doing transactions in Bitcoin on a blockchain that was developed by one person 12 years back with just 8 pages of white paper, why is it not failing? So there it shows the kind of the strength or the stability of these blockchains that have been developed with a very long-term plan that they have kept in the mind. So that makes this as a technology one of the big advantages, that why it is going to be the future. Then the second thing is secure public ledger. Like the whole thing of blockchain is visible to anyone. Like you can go on the blockchain of Bitcoin on the internet and you can see which are these 300 million users and how much of Bitcoin they're having in their wallet. So this is a public information. Everybody can go see it and they can know that what is the exact usage of Bitcoin right now. But it is secured. Like you can't go and do any tamper, or you can't go and do anything that you can in terms of taking out the Bitcoin from one wallet and put it in your wallet. That's impossible. So that's another advantage. Like in the banking system, can you go and find out that who is having account and what is there in that account? Nothing. It's impossible. So this is another reason that transparency and the security is one of the big factors of crypto. And of course, various utility applications. So this is another topic that really needs a lot of discussion, but I don't want to get into too much detail. Like everybody says, they don't understand what goes under that crypto. People just think, okay, crypto is another asset class which you can punt with. And if you're lucky, you will make money. And if you're unlucky, you will lose money. But no, each cryptocurrencies, at least I can say top 20 or top 30, has a very beautiful business case which is supporting the whole concept of that cryptocurrency. So Bitcoin has a business case which is fulfilling, like it's becoming like a digital gold, or it's becoming like a mode of payment. Ethereum, it's a smart contract thing. So all the contracts in the world now are being executed digitally using Ethereum. And to use that facility of doing the smart contract, you need to pay in Ethereum, which is ETH. Similarly, XRP is being used for the cross-border remittance, which I'm sure my friend Naveen will talk about. Similarly, all other cryptocurrencies, if you really understand, just spend like 5 minutes on each cryptocurrencies, you will understand the kind of problem that they are solving that has not been solved by our existing banking structure of 200 years. And as an investment, we can say that growing maturity, adoption, huge hedge against inflation, and still we are in a very, very early years of this asset class. All other asset class, whether it's treasury or it's commodities or it's bonds or it's forex or it's shares, have been in existence for like centuries and centuries. But this is just a 12 years old asset class, and how fast it is becoming an accepted asset class. So people say crypto is always about losing money. I bought at this price and it fall down suddenly to this price. But if you're a long-term investor and if you have invested $1,000 in BTC, just like 5 years back, you would have been sitting with $21,000 now. So you can understand the kind of growth that this asset class had in the last few years itself. And with the going forward with the vision and what kind of new applications and new adoptions of this cryptocurrency is happening, you can do your own maths and see where it can be after 5 years. So before we get in, one advantage that we didn't mention here is there is one big problem that exists in the fiat world, and that is the problem of counterfeiting. Like, we know, okay, this much of US dollars are in circulation officially, but do we know what is the circulation of US dollar? Or let's say any other fiat currency, forget US dollar, talk about euro, talk about Japanese yen, talk about our Indian rupee. How much of the illegitimate market exists, which is the fake currencies? And this is a big problem in the fiat industry. And because of that problem, you have inflation, you have so many other financial crimes and things like that. And that's another beautiful solution that crypto brings, which addresses this problem of fiat, is there is no counterfeiting possible. If you have a Bitcoin, nobody else can have that Bitcoin. It has a unique code, it has the unique private key, nobody can have. And nobody can mint or mine a fake Bitcoin. It's impossible. People have tried. There were supercomputers that were used to hack into the blockchain of the Bitcoin to generate a parallel fork of the Bitcoin network on which new Bitcoins can be generated. It never happened. And you can understand that why it did not happen, because of the technology that is there and which is very stable and which is very secure. So that is one big problem of fiat industry that crypto is solving in a very effective way. And also, the second problem of fiat is its unlimited supply. Like we have seen in the COVID time, most of the governments, they overprinted their currency because they just wanted to support the people who were out of job or out of business. So they wanted support. Like in US, we call, at that time, there was a helicopter money. Every quarter, there will be helicopter coming in, dropping US dollars on the US citizens. For $1,000 per person, $2,000 per person. So this was all uncontrolled, nothing linked to monetary policy or debts or GDP, nothing, just to keep the population happy. This is another problem that crypto solves. Every crypto, most of it I would say, has a defined limit beyond which it cannot be produced. Bitcoin cannot be produced beyond 21 million. And in the past 12 years, already 18.5 million Bitcoins have been produced through the process called as mining. This is another complex thing which we can get into a separate session. I can show you how the mining is done. But there is a hard cap of 21 million on Bitcoin. After 21 million, nobody can produce more than even 0.0001 Bitcoin beyond 21 million. And you know, in the last 12 years, 18.4 million Bitcoin has been produced using mining. You know how many more years are needed to produce the balance, 3.5, 3.6 million Bitcoins? Can anybody guess? Yeah. So you can understand the complexity that more miners come, more Bitcoin comes in the market, the blockchain or the underlying technology makes the algorithm even more difficult to produce a Bitcoin. Before it was much easy. So it's like a simple mathematics. It's a simple market statistics. If there are less buyers, the price will fall down. So similarly, when there are more miners, more people want Bitcoin, the complexity of solving the problem to generate a Bitcoin increases multifold. So you need more computers, you need more computing power to generate a new Bitcoin. So the expectation is by 2140, 21 million of Bitcoins will be produced. So this is another beautiful angle of this technology, which shows that this guy, whosoever was he, what all thoughts he had made, he thought not just about next 5 years or 10 years, which our governments do. He thought about like next 200 years, that how this whole chain will work, and it's working beautifully. Every 4 years, the mining reward gets halved. Every different reaching a concession mechanism that is changed. So it's really something really we should all, as finance professionals, get into more detail and understand these nitty-gritties, which are extremely interesting. So this is the second problem that crypto addresses, that there cannot be more than 21 million Bitcoin, there cannot be more than X number of Ethereum. So everything is hard capped. So now, what happens, let's say, if someone wants to get into trading of Bitcoin, so, or let's say any cryptocurrency. So it's like an exchange, which is like any other exchange, like, you know, Bombay Stock Exchange, National Stock Exchange, or Abu Dhabi, Dubai Exchange, or even let's say Western exchanges like London and Deutsche Börse and other things. Everything is mostly same. So you have clients who are registering on an exchange and then trading on it. And then after that, there is a settlement happening. So same way, like we go to National Stock Exchange, we go to a broker, open an account, deposit the money, buy Reliance, buy Tata, whatever you want to buy. The main fundamental difference between a crypto exchange and a stock exchange, or let's say any commodity exchange, is all the exchanges, they operate only 5 days in a week. And they operate for a certain hours. They may open at 9 o'clock and then close at 3 o'clock or 6 o'clock, whatever the different exchange timings is. In crypto, this is changed. So crypto does not sleep. That's what we learned when we watched the movie Wall Street. Money never sleeps. So crypto never sleeps. It's a 24/7 exchange. The second thing that fundamentally changed in a crypto exchange is that there is no intermediaries. Because of the strength of the technology, because of the whole decentralization mechanism, exchanges offer direct trading to the client. So you need not to go and open an account with the broker and then put money with him. Tomorrow he disappears, your money is gone. No. You go directly to the exchange, open an account, and start trading. And it's all instantaneous. You don't even have to go physically or send your papers through an email or present your Emirates ID, nothing. You go online, you register, give your selfie, they will do your verification, put your passport copy. In like few seconds, the whole process is done. You're onboarded. You can transfer the funds, or if you have already cryptocurrencies, you can transfer the cryptocurrencies and start buying and selling. So it's that easy. So in the middle, everything like risk management, surveillance, position monitoring, those things are pretty much the same as we have in the stock or commodities market. The second change that comes is on this right-hand side, where we have integration with the blockchains. Because all these in buying and selling, I'm selling, Mr. John is buying. But all this transaction has to be written on the blockchain. Without blockchain, if you remember, I told that 51% consensus is very important for any cryptocurrencies to change hand. So let's say I have a wallet in my mobile phone. Mr. John has a wallet in his mobile phone. I sell 1 Bitcoin and he buys 1 Bitcoin. As an exchange, I can't do the settlement. The settlement has to be done by the community of miners who are validating the transaction between Arshad and John. Until 51% people approves the transaction, my Bitcoin will not move from my wallet to Mr. John wallet. So that's how the settlement of cryptocurrencies happens. And that's what we say, that whole process of mining comes into that play when we are doing this transaction. And when these 51% people are approving this transaction, they check the transaction. It has to be legitimate. And that's why this transaction, once it is done, cannot be reversed. And that's another thing on the blockchain. Once the block, they get the reward in the form of cryptocurrencies. So, yeah. So they are validating and they are getting rewarded in the form of Bitcoin. And that's why this new Bitcoins keep coming in till 21 million. So this is the whole process that is put into place to make this system more secure, more stable, and more a governance framework of a consensus of a community, rather than one as a CEO of an exchange, I can decide whether I want to do the settlement between John and Arshad. No, it's the community that will decide. Only as an exchange, I am facilitating John and Arshad to meet electronically and do the transaction. But approval of the transaction will come from the community of the blockchain miners. Now, the world of crypto, as we have been talking about, I'm amazed. We sleep with one thing, tomorrow we wake up with something new. Especially in the last 2 years, it has been fascinating. And it's so difficult for us as professionals to keep ourselves updated with what all new things have been coming up in this industry. Like till 5 years back, or let's say 6 years back, people were just learning about crypto. Okay, what is Bitcoin? They were learning how the mining is done. What is Ethereum? What's the use case of Ethereum? How the Ethereum works in the smart contract space. Like we were just learning. And that time it was few cryptocurrencies. Now we have 20,000 cryptocurrencies. And if you see, if you really understand, and if you go into understanding each and every cryptocurrency, you will see there is some uniqueness and there is some use case that this cryptocurrency is bringing to its users. But suddenly in the last 2-3 years, I would say rather even 2 years, this space start exploding using the technology of blockchain. and the mechanism of crypto as a payment mode of payment. So what we saw is that we have decentralized finance. So this new definition came in to provide a lot of services to the users on a decentralized finance architecture. So like lending products, insurance products, even mortgage products, all these start coming on DeFi platforms. Another fascinating thing came up, like maybe I would say like 1.5 years back, when suddenly we woke up one day and we were looking at our social media, Twitter, or we were looking at some news website that a person in Singapore has bought our digital art for I think $70 million. And that was the time that people started talking about NFTs. So just to understand what an NFT is it's a non-fungible token. What is cryptocurrency is? It's a fungible token. So like if I transfer my Bitcoin to John, it's fungible, I can transfer. But in NFTs is non-fungible. So the ownership remains with the holder of the NFT. So this Beeple that got sold in, I think 1.5 years back or 1 year back, I don't exactly remember, created an explosion on the scene of NFTs. Like people started talking about it. I think if anybody would have done a PR exercise of more than 100 million or 200 million would not have got so much of coverage. That happened for this guy. And if you people don't know, he is also of Indian origin. And he was always a believer in cryptocurrencies. He entered into the crypto at a very early stage. And he, of course, made a lot of money. So he paid $70 million for that NFT, which was called as Beeple. And that brought this NFT into so much of focus that now if you go and see each and every corporate, each and every artist, each and every producer of any kind of media is into NFTs now. We are seeing in India, like all the big Bollywood stars, all the big South Indian movie stars. Kamala Hassan has recently launched his own NFT. Similarly, we have seen so many others like Shah Rukh Khan and Amitabh Bachchan has started getting out with their own NFT products. So NFT came on the scene just because of the two things. One was the crypto and the second was the blockchain. Third thing that we have not put here, again, we were talking about that, was Metaverse. And that Metaverse also is becoming so much popular and so much exciting. And there is, again, a huge number of people who are getting into this kind of digital world where it's a complete virtual reality with a very different kind of operating concept and the economic concept. So that has come in. Crypto staking came in, which we have seen that people who own crypto, they can stake and they can generate a good APR on their investments in the crypto. Yield farming, again, putting into form of a loan and loaning your crypto. Like we used to have LB, like Badla system in Bombay Stock Exchange before. So these are the new concepts. The underlying mechanism remains the same, but the way it is executed is completely changed. And that's bringing more participation and bringing more enthusiasm for people to get into the crypto space. Can I trust crypto? So I don't know if what was the perception of the people when we started this talk, like probably half an hour back. But I think this is a good question to ask when we have almost come to the final slides in this presentation. Although I'm sure still people will, if we take an individual opinion, people will say, no, I still don't trust crypto. So that's why I put some slides just to give you an idea what's happening on the crypto scene in the recent space. In US, there is of course, US has been always the kind of a womb for all these kind of new technologies, whether it was right from the internet age to the social media to Web 2 and Web 3, it's all happening there. So crypto, of course, also has a lot of roots, if you can see, in US, and most of the biggest exchanges that are currently operating throughout the world are based in US. UAE, as I was talking about, is taking leaps and leaps bounds into the blockchain and crypto space. They have been the first adopter of a formal regulation to regulate crypto exchanges and crypto trading, which was done by Abu Dhabi Global Market, not like 2-3 years back, but like almost 4 years back. In 2018, Abu Dhabi Global Market was the first regulator in the world which brought a formal regulatory framework to regulate the crypto exchanges and crypto trading. So here we are. Similarly, if you see Morgan Stanley, UBS, Stanchart, Goldman Sachs, Citi, you name it, No one is saying no to crypto now. And I can tell you with great confidence, 2 years back, 70% were saying it's a scam, it's a bubble. I have seen so many scams. All of you would have seen so many scams. Small scams, big scam, financial scam, corporate scam. But I have not seen a scam which can last 12 years. Have you seen any scam which can last 12 years? Or a bubble which can last 12 years? I don't think so. So I think let's take that conception or that notion out from our mind that it's still a bubble, still a scam. Otherwise, let's debate, can a scam or a bubble last 12 years? It cannot. So this is an interesting slide that we have put together just to show you that how the adoption of crypto is happening. When I say adoption of crypto, again, please don't misunderstand it just by people trading in crypto. No, crypto is now being used for remittances. Crypto is being used for payments. Crypto is being used for smart contracts, and crypto is being used for even your lending and borrowing products also. And you can see like what is happening there. Like one example we got was of the Facebook. You can see the big software companies, right, from Microsoft to the and these are very few, I can tell you. These are like just not even 10% of the corporates which have already got into crypto in one way or other. Even if you look at our UAE, Kareem, real estate brokers, Emirates Airlines, the Mark Property, there are so many cafes and restaurants, even the real estate companies which have started accepting crypto as payment. And why they are doing that? Because that takes away, if you use your MasterCard or your Visa card for paying anything, you know how much of that percentage goes to these companies who are running these payment network. Similarly, if you are remitting money from, let's say, sending your money to your parents or your family in India, what is the SWIFT charges that goes into it, and how much time does it take? If you do a transaction on Friday, maybe they will get it on Monday if there is no holiday in India on Monday. But in crypto, it's instantaneous, and it is fractional of the price that you otherwise pay to the normal mode of remittances. And I'm sure Naveen will cover this in more detail. So you have all these big brands, big software companies, big real estate companies already into crypto, neck deep. Not just that they have been testing the waters, they already have a proper functioning crypto ecosystem in their business model. So, of course, as I said in my beginning, crypto has been known for its good reasons, and crypto has been known for its bad reasons. And what I can say, why these bad reasons were there, because crypto grew so fast. Like in few years, from few cryptocurrencies, we jumped to like 20,000 cryptocurrencies. From like few exchanges, it was like 1,000 exchanges in the world. From like few million users, it was like 300 million users. And it all happened in, let's say, 4 or 5 years' time. So when things happen so fast, of course, there are a lot of people who take advantage of that phenomena or that craze. And some people, they come with some bad intentions, and they come out with some fraudulent schemes, or they come out with some fraudulent coins. And we have seen so many times, we get the news either in local newspapers or international news wires that some new coin came, it duped the investors, and people lost millions and millions into it. Similarly, some new white paper was published, and they promised like 20% return a year, and people got duped into it. So that's part of the evolution of an ecosystem or a new asset class. But why it was happening more at that time? Because the regulators were not coming in to regulate this thing, which is started to happen now in the last few years. Because initially, the view of the regulators was that this will fail. Like even the chief of IMF said, this will fail. Big authorities or big central banks, they said it will fail. But now they have realized it's not going to fail. It's not going anywhere. Either you accept it and start regulating it, or otherwise it will go beyond their control in the future. So now what has happened, all the regulatory authorities, most of it I would say, go on a global level. Most of you would have heard about FATF. So FATF has like 120, 130 participating countries into that. And if you see the recent statistics, around 70 countries have already started adopting regulations for crypto. And FATF has come out like 3 years back with a paper which said that crypto, they were the first regulatory agency on a global basis that accepted crypto. They said yes. In 3 years back when they came out with that paper, they said yes, crypto is an asset class like any other asset class, and it can be traded, it can be invested, but in a regulated manner. So from then on, the members of the FATF countries, they were given the targets that either you adopt the regulations of crypto or you say no. But surprisingly, more than 50% said yes in the very first year itself. And they started implementing the regulations. And now more than 70 countries have already got full-fledged regulations of regulating the crypto. So because of these regulations, now things are becoming more safe, more secure. And then there is an awareness that people are getting that when they have these regulations, like you cannot become a client of an exchange without doing a proper paperwork, without giving your proper identification documents, your source of wealth and proof of income. So all these things have started making things more secure. So this will be another reason that in the next 5 years, the growth of crypto will be again phenomenal, not just the technology or the beauty of the product, but also because of the regulations. And if you remember the slides, 2 slides back when we show all the corporates, the big banks coming into it, it's all because now the crypto is getting regulated. So the banks who are under regulations of a central bank or some jurisdiction, they can now get into crypto because the regulator of that bank is allowing them to get into crypto. So that's another reason that why these big corporates or these big financial institutions, they are getting into crypto. So the good practices, as we all know, we are all finance professionals registering the legitimate customers. Crypto has been used very, very rampantly for financial crimes. It was used very heavily for money laundering, for all other form of financial crimes. But yes, because there was no regulator at that time, there was no awareness, there was no basic understanding, so it was misused. But yes, now with all the regulations coming in, registering the legitimate customer, this all practices are going down. And there is published statistics in the last 3 years, the use of crypto for the financial crime purposes is significantly going down. And the whole purpose to have crypto is to get this benefit. Because using fiat, if I give you 10,000 dirham in cash to John right now, is there any proof of that? No. I just give him in a packet, he takes it away. But in crypto, you can't do that because crypto has to go through the blockchain. The community has to know about it. So all these things have to become a reality now to ensure that crypto cannot be used for financial crime. And that's another reason that all these banks are getting into it, because now they know that effective systems are there, effective technology is there, effective agencies are there who are monitoring all this process. Information of customers. We don't provide services to suspected terrorists or sanctions lists like in our exchange. When we onboard a customer, we do a background check with almost like 70, 80 lists that are published by various agencies in the world. So we ensure that no customer is being onboarded who can bring any kind of misuse into the exchange platform. And of course, to comply with the effective AML and transaction monitoring. So transaction monitoring, as I said, when the crypto movement is happening, when the blockchain is writing those transactions, you have to still monitor that transaction. And the beauty of this blockchain is the first Bitcoin that was mined like 12 years back, you can still see that on the blockchain from which wallet to which wallet it has moved in the last 12 years. And now with the new system that we have, we can rate these wallets, whether these wallets have been used by any financial crime purpose in the past, like even 5 years back or 10 years back, and each wallet has a rating. So if you receive a Bitcoin from some wallet which has some suspicious rating, our exchange will immediately alert you. So this is the sophistication that has been brought into the blockchain network, that any transaction, and that's what we call as transaction monitoring, that any transaction that is happening between wallets, we have to ensure that you don't do a transaction with anyone who has done any transaction in the past with some Al-Qaeda group or some any other financial crime. So these are the sophistications that are now coming in, and which is creating more sustainability for the crypto market. So that's it from my side. I think I've taken some more time, a little bit more time, but I thought this will be very useful for you to take away and get some more thoughts. Thank you very much again, and it was a pleasure to speak with you.